Hey everyone, welcome back to Corporate Decoder, the place where we try to find out if Ashford Hospitality Trust is checking out or just checking in with their latest filings. Today we are diving into a recent report that sheds light on some interesting financial moves this company is making. It looks like they are trying to manage some debt and preserve cash, which often means some tough decisions. So what is the news from Ashford Hospitality Trust Incorporated? Well, on the 13th of January of 2026, they put out some important information about their financial situation. Essentially, they are telling us about an extension on a significant mortgage loan. This loan is secured by 18 of their hotels. Now here is the deal with this loan extension. As part of the agreement, they had to pay down $10 million of the loan. So the current outstanding balance is now $723.6 million. This is a pretty substantial amount of money. The report also states that this new balance is about 65% of the appraised value of those hotels. This tells us they are still carrying a lot of debt relative to the value of these assets, but the loan is now more manageable in terms of its loan-to-value ratio. The extended loan now matures on July 9th of 2026, which means they have bought themselves a little more time. But it is not all good news regarding their financial strategy to help them keep more cash on hand while they figure out their next steps, which the report calls evaluating strategic alternatives. They have decided to suspend preferred dividends. This is a big deal for investors who hold preferred stock. They are talking about dividends that were already announced but will not be paid out as planned on January 15th of 2026. This suspension affects several series of their preferred stock, including Series D, FGA, J, K, L, and M. The company does say they intend to pay these dividends as soon as they can, and any dividends that were already earned but not paid will continue to accrue according to the rules for each type of preferred stock. They will be looking at paying dividends quarterly going forward. Let's look at what is registered that people can actually trade. They have common stock trading under the symbol HE on the New York Stock Exchange. Then there are various series of preferred stock also listed on the New York Stock Exchange. We see Series D, Series F, Series G, Series H, and Series I. Each of these preferred stocks have their own trading symbols like HA-PD for Series D and HA-Pi for Series I. This shows that the company has a diverse capital structure with different types of investments available to the public. All of this information is detailed in a press release that they issued on the 13th of January of 2026. This press release is attached to their filing. Think of it as the official announcement that gives us the specifics of these financial decisions. Now, what is the story behind all these big words and numbers? Ashford Hospitality Trust is in a situation where they need to manage their debt and preserve cash. Extending a large mortgage loan is a way to avoid immediate default or a forced sale of assets. However, suspending preferred dividends is a clear signal that cash flow is tight or they are prioritizing other financial obligations, perhaps to shore up their balance sheet or to make themselves more attractive for those strategic alternatives they are exploring. This could mean anything from selling off properties to a merger or acquisition. When a company suspends preferred dividends, it can make investors nervous. Preferred stock is usually seen as a more stable investment than common stock, and the consistent dividend payouts are a key attraction. By stopping these payments, investors might start questioning the company's financial health and its ability to generate stable income from its operations. This move is often a last resort when a company is facing significant financial pressure. So what does this mean for Ashford Hospitality Trust? It seems they are walking a tightrope. On one hand, they are proactively managing a large debt obligation by securing an extension and reducing the loan-to-value ratio. On the other hand, they are making a tough choice by halting dividend payments to preferred shareholders. This suggests a strategy focused on immediate financial stability and flexibility for future actions, even if it comes at the cost of short-term investor returns. They are essentially saying preserving cash and managing debt is more critical right now than paying out to preferred shareholders. This could be a smart move if it allows them to navigate challenges and emerge stronger, or it could be a sign of deeper problems. We will have to watch closely how these strategic alternatives play out and whether they can restore profitability and dividend payments in the future. Alright, that is my take on Ashford Hospitality Trust Incorporated's latest filing. What are your thoughts on these financial maneuvers? Are they a sign of smart management or cause for concern? Let me know in the comments below. If you found this breakdown useful, make sure to hit that like button and subscribe for more corporate insights. And don't forget to check out our Discord community linked in the description for more discussions. Thanks for watching, and I'll see you on the next one.